Glad that everyone is here for this exciting 1 hour with me and my team. And I think you're in for a wild ride. Today we will talk about loyalty and what it means in this ever-changing landscape. How that equation is changing. What are those pain points that CMOs and anybody in growth, frankly, is facing, and what can you do about it? But first up, let me do some quick introductions. So my name is Nitish. I'm a partner with Everest Group. I have the privilege of leading our work on marketing and experience globally and end up in this role working with enterprises, providers, and investors in the space. So, really glad to be here and share what we're seeing. Let me hand it over to Divya.
Thanks, Nitish. Hello, everyone. This is Divya Paveja, Practice Director at Everest Group, co-leading the Marketing and Sales Services Charter. I started my career with strategy consulting and have been with Everest Group for around 4 years now. My research focus areas here include everything sales and marketing, whether it's B2B and B2C sales services space, Rev Intelligence, Rev Enablement Platform, content supply chain, commerce services, and loyalty, a fascinating and evolving area we'll be discussing today. I'll pass it over to my colleague Akash.
Sure. Thank you, Divya. Hey, everyone. I'm Akash Verma, Senior Analyst in the Marketing and Interactive Experience Practice at Everest Group. And as part of my role, I lead the research charter and market conversations on the MarTech ecosystem, including loyalty. Good to connect with you all today.
Perfect. Thank you, Divya. Thank you, Akash, for both spending the time with me and our audience today, but also sharing the wealth of your experience and insights in the space. So, with this, let's just level set in terms of what we will cover today. Anybody who's not familiar with our programming and our webinars, we typically follow a three-part structure. So, we'll talk a little bit about the state of the market, if you will. So, what's happening in loyalty? How is this market performing? How's it growing? What are the pain points that clients are seeing? Then we'll talk about AI. What else? But how is it transforming loyalty programs and also loyalty platforms and the services around loyalty? And then we'll try and end with the prescription of the future. I don't think we can predict what's going to happen in 3, 4 years from now. So we'll try and do our best for 2026 as we wrap this year up. So what can you expect if you're a buyer as well as a provider in the space? How should you think about 2026 and your priorities? We'll do that. And as a part of that, we will do Q&A as well. A few housekeeping notes in addition to what you heard in the beginning of the program. One, we will have a few polls through the discussion to keep this lively, so we do encourage participation. Second, yes, this document will be available to anybody who registered along with the playback. So do refer to that for those details. And third, if you have questions that you'd like to talk to us about, please put them in the questions tab on your Zoom window. We'd love to take them in the end. We also have a set of pre-submitted questions that we'd like to prioritize. So we'll do a mix of both pre-submitted as well as live questions today. So with that, let's kick things off. And today my role will be of more of a moderator, showcasing what we're seeing, but also then bringing my colleagues in as we go through this journey. Now, loyalty is a really interesting space because if you really think about loyalty, it's really at the intersection of what we call marketing and sales. And Divya, as you discuss a little bit around this, one of the things we've been thinking about is really this 80-20 rule, right? So, what that really means is if you really think about why loyalty is back at the top of the CMO agenda. We've always seen, and our CMO survey shows this as well, that some of the biggest pain points today are adapting to rapidly changing consumer behaviors. How do you do that while improving retention and boosting conversion, all at the time when marketing budgets are under pressure? That fundamentally is the premise behind why customer retention and loyalty are becoming so important. So, with that, Divya, what does our latest CMO survey tell us? How are buyers looking at this, and where do we go from here?
Sure. Thanks, Nitish. Yes, as you mentioned, right, loyalty is definitely one of a fascinating topic, but it's also one of the topic that has evolved significantly over the last few years. If I go back a couple of years, all the loyalty conversations were more around transactional rewards, discount-based incentives. But what we are seeing at this point of time is loyalty programs are very rapidly evolving into strategic ecosystems that are more and more centered around personalization, emotional engagement, and long term customer value. And if you look at our CMO survey, we try to look at some of the simple but revealing conversations that we'll present across this slide. So, what we asked our enterprises is what are the key pressing problems that they see within the next 12 to 18 months for them? And what we discovered were that majority of the responses were around customer behavior, engagement, and loyalty. So, if you see at the numbers here, 57% of enterprises mentioned that adapting to changing customer behavior and preferences is something that they see as a major hurdle. And honestly, that's not very surprising. What we are seeing is customer expectations are changing significantly faster than what organizations are being able to keep up with the pace with. Specifically, when you focus to younger generations who have different values, different expectations, and a very limited tolerance when it comes to friction. Then we look at other stats within this slide. The 56%, which is around improving customer retention and loyalty. And that is where the 80-20 rule actually comes into picture. What we discovered is a very small base of loyal customers often drives a very disproportionate share of revenue for enterprises. And more, what we are seeing is CMOs are recognizing that they can no longer afford to lose these higher value segments. Then we see some other interesting stats is generating leads. 54% enterprises said that this will be their key problem when it comes to future. Boosting conversations 53% and improving engagement at 51%. But net and overall, what these stats point out to us is organizations at this point are very much focused on how to deepen relationships with the customers who matter the most. And further to validate this, is it focused on one specific vertical or broadly? If we look at the stats on the right side, what we see is this trend is not just confined to one specific industry or sector. Sectors like travel, hospitality, media entertainment, healthcare, life sciences, energy, utilities, and retail CPG. All of them have shown very high levels of CMO interest when it comes to loyalties. In many cases, it has been even greater than 60%. So, what it tells us is this loyalty overall is not just going to be a nice to have program which can be tucked inside your overall marketing and sales services strategy. It is increasingly becoming the anchor around how enterprises shape their customer expectations, how they look at their conversion as well as acquisition going forward. What I'll do next is invite my colleague to talk about how actually modern loyalty looks like in practice.
Sure. Thank you, Divya. Building on Divya's point about changing expectations, now let's look at what modern loyalty actually looks like in practice. On this slide, you have two great examples of organizations that have moved far beyond transactional loyalty mechanics that Divya just spoke about in the previous slide. Let's start with the Nike Run Club on the left. What Nike has built here is not a rewards program, it's a behavioral ecosystem. The app motivates runners through gamification elements like challenges, badges, streaks, and leaderboards. It transforms running, which is perceived something that can feel very individual, into a shared community experience. And the brilliance of this model is that loyalty emerges not because customers earn points, but because they build habits, feel motivation, and participate in a community. Now contrast that with Sephora's Beauty Insider community on the right. Here, the primary driver isn't gamification, it's community and influence. Sephora enables creators and members to share referral codes, participate in topic-specific groups, and exchange beauty routines and serve advice. This transforms loyalty into a social experience where members feel they are part of a tribe, where they learn from each other, where recognition and influence matter just as much as rewards. Two very different approaches, one that is rooted in behavior, the other that is rooted in community, but both point to the same truth. Loyalty strengthens when people feel connected to a goal, to a community, or to a sense of identity. If we move further on the next slide, we see two more examples that reinforce this shift, this time highlighting how loyalty expands through ecosystems and emotional resonance. First one on the left is Cred. Cred has built one of the most successful loyalty ecosystems in fintech, not just by focusing on points, but creating a whole digital wallet experience that is surrounded by a broad network of brand partnerships. Users can earn or redeem credit points for cashback offers, vouchers, exclusive merchandise, or even curated experiences. The sheer variety of rewards that it offers keeps the program feeling fresh. And because it's tied into credit card payment behavior, customers engage with credit almost daily. On the right, you have Red Bull, which represents a totally different model. I would say emotional loyalty. Red Bull doesn't rely on a formal loyalty program at all. Instead, they build loyalty through high quality content around extreme sports, adventure, and culture. Through documentaries, athlete stories, and adrenaline filled experience, Red Bull creates an emotional universe that resonates deeply with a specific lifestyle. Customers don't stay loyal because Red Bull gives them a discount. They stay loyal because the brand aligns with who they are or who they aspire to be. So across all the four programs that we just see, one thing is really common. Modern loyalty is no longer defined by the program, it's defined by the experience. The brands that we see are winning today are the ones creating meaning, community, identity, and emotional connection. Rewards matter, but they are no longer the center of gravity. I think, Nitish, with that, we have time for a quick audience poll. Why don't you take us to the first question that we have?
Yeah, Akash, that's a great point, and I think a great summary of what are the four distinctive things that help loyalty programs in today's day and age stand out. So, with this, we'd like to take a pulse of the virtual room that we have, and I see we have a broad representation across buyers and providers and investors on the in our audience today. So, how do you think about, if you're a buyer, how do you think about your budgets for loyalty programs over the next 12 months, as you wrap up the year? Do you expect this to increase significantly, which is more than 20% compared to this year? Will it be a moderate increase, 5 to 20? Will it be maybe a flat, no change, or would you expect a decrease? So you'll quickly see options float up in terms of these polls. So we'd love to see your responses. And while we give everybody maybe 30, 45 seconds to respond, Akash, I'm trying to see where the room will lie. Do you want to guess where people will eventually put their responses? Which response do you think is going to win?
I think, Nitish, I would place my bets on the first two responses here. Loyalty budgets will definitely increase over the next 12 months.
And I think we see that with our enterprise customers as well. While at the same time, as I said in the beginning, there is a lot of pressure on marketing budgets more broadly.
Yeah.
But how does that change going forward? I'd be curious to see if people respond to more than 20%. But definitely we're seeing a lot of bullishness in terms of loyalty programs. I think we've got a bunch of responses already. So we'll give a few more minutes, but now, yep, I think we have the responses in front of us. Very interestingly, nobody said they expect the budgets to increase by more than 20%, which in this economy perhaps makes sense. The winning response was 5 to 20%, which I think sounds about right based on our enterprise conversations. And about two-fifths of our respondents, nearly 42%, believe there's going to be moderate to no change, so more flat budgets. So how do you do more with less becomes an important consideration, and that's where I think the role of AI and how that changes the dynamics comes in. So I think that's a really good sense of the market. Let's move on. So let's talk a little bit about what we are seeing in terms of the broader market. So Akash, again, let me bring you back, right? We do a lot of market sizing, we're doing a lot of trend analysis in terms of where our customers thinking. So as you think about loyalty, both from a platform and services standpoint, it seems like a fairly healthy growth in this market. But what seems to be driving it? What's the underlying cause for this?
Sure, Nitish. I'll just spend some time on this slide and take a moment to look at the size of the loyalty market and what's driving its growth. On the left, what we see is the overall spend on loyalty platforms and services between 23 and 27. What's striking here is not just the size of the market, but the consistency of its expansion. In 25, as we expect, the total spend is around $12 billion, and by 27, we expect that number to grow by 14 to 15 billion. That translates to a roughly 10 to 12 growth rate, 10 to 12% growth rate, which is quite strong for a category that has historically grew at upper single digit rates. If you look at the composition, what's interesting to note is the platform growth, a healthy growth rate of 18 to 20%, indicating a strong demand for modern SaaS platform to enterprises. Services continue to make up the larger share, roughly two-thirds of the spend by 27, and that's important. What it tells us is that enterprises are not just buying technology, they're investing in strategy, design, integration, analytics, and ongoing optimization of the loyalty programs. In other words, I would say loyalty is no longer a plug and play system. It's becoming a transformation-led capability. On the right-hand side, we have four key growth drivers that are behind this expansion. First, we are seeing rapid mobile-first digital transformation, which is really reshaping how customers expect to engage with loyalty programs. Everything must be real-time, contextual, and seamlessly accessible. Secondly, what we are seeing is enterprises are prioritizing omni-channel integration. Customers no longer distinguish between different channels, and loyalty needs to follow them, whether they are transacting online, in-store, or on mobile. This is driving significant investment in platforms that unify data and customer journeys. Third, there is push towards hyper-personalization. Customers now expect offers, experiences, and communications that are tailored to them, not to a segment that they happen to fall into. And finally, I would say enterprises are doubling down on customer lifetime value optimization. Customer retention is a major focus area, given, as you just mentioned, that marketing budgets are becoming tighter. The cost of acquiring a new customer is way more than retaining an existing customer. Net net, I would say that loyalty is increasingly seen as a lever. How do you deepen relationships with your customers, grow share of wallet, and strengthen retention? All of which directly impacts customer lifetime value. So when you combine the solid market growth with these structural drivers, I would say it has really transformed into a strategic growth engine for many organizations. Divya, why don't you take us through the key themes governing the loyalty landscape now?
What you will see here is we have tried to list down what are the key themes that are helping govern how loyalty programs are getting designed as well as delivered across industries. I'll want you to look at four factors that are actually changing customer expectations and what they actually look for within the loyalty landscape right now. Those four factors will be immediacy, personalization, accessibility, and progressive value. And whatever themes that govern your loyalty landscape are built around these four factors. If we look at the first theme, personalization, today customers don't look at personalization that just at segment level targeting. They want experiences, recommendations, content that are tailored to them as individuals. Any program that fails to hyper personalize experiences significantly for them will eventually see declining engagement. Secondly, what we see and look at is mobile first integration. What we believe is that the most successful programs within loyalty will be the ones that will make participation effortless. And that can be across spaces, on the go access, stored payment methods, quick redemption, real time notification. And across all of these spaces, what we are seeing is mobile is becoming the primary loyalty interface for customers to keep continuously engaging with. AI. I don't think we can have any conversations today without mentioning AI and agentic AI. What we are seeing is organizations are using AI enabled predictive analytics to anticipate needs of customers and use those needs to continuously optimize journeys. Everything right from churn risk, next best offer, automated content generation, AI is helping generate and optimize. Additionally, what we are seeing is AI is making a significant shift from loyalty to something that was just reactive to a proactive stage. A very big bet that we place within the loyalty space is B2B loyalty. What we are seeing right now is organizations are not just restricting loyalty to end customers, but using it to deepen relationship with their partners, whether it's distributors, channel partners, resellers. Initiatives and recognitions that are just as powerful in B2B space as we have seen within the B2C space itself. Few other themes that I want you to walk through here is coalition loyalty. We are seeing a lot of renewed interest in this space. What coalition loyalty does is it allows customer to earn and redeem points across multiple partner brands, and that helps them actually find that competitive differentiation with walled garden ecosystem. Additionally, what it does is it helps you expand the perceived value that your points and redemption offers and help keep customers engaged even when their spending patterns shift. A very focus area within loyalty and where we are seeing significant investments coming across in today's time and era is gamification. Brands that are introducing challenges, streaks, levels, and interactive experiences are witnessing significantly higher engagement. Where we are seeing gamification make a significant mark is specifically for younger demographics and lifestyle-led brands and categories. When you talk about what is the architecture for loyalty going forward, where we place bets as modular architecture, and multiple factors come into place. Flexible API first in systems allow organizations to innovate faster, add new partners, add new and test as well as new reward mechanics. What it also helps us integrate with various other MarTech tools without very heavy rework that will be needed. Now, having understood that the loyalty management is getting reshaped significantly, there are new ways that we are looking at it, new investments getting made within this space. What we are also witnessing is loyalty measurement is also becoming sophisticated to keep in pace with all these trends. Enterprises are significantly moving beyond simple redemption metrics to involve metrics such as emotional loyalty, brand affinity, engagement depth, as well as long-term value creation. What it is helping is enabling decisions which are very strongly aligned to what customers are looking forward to as well as enterprise growth goals. So, taken together, what these themes represent for us is it paints a picture for loyalty ecosystems that is much more dynamic, much more intelligent, and very far more aligned when it comes to customer expectations. This is the landscape where we are seeing organization further making a lot of investments specifically within the AI that we'll be looking forward to in the next section. But before that, Nitish, why don't we spend some time to tell the audience what we have in store for them?
Absolutely. So if you're looking for an early Christmas or holiday gift, we have one for you. As again, anybody who's witnessed or seen our webinars, we'd like to offer a session or something that you can use to understand our perspectives on this more. So you'll quickly see, and you have now a link pop up in the chat. So if you register your interest there and want to discuss everything or anything around loyalty with our teams, do let us know whether you're an enterprise customer or a provider or an investor in this space. We'd love to talk to you and share what we're seeing and see how we can help you. So if you head on over to the link and submit your details, one person or somebody in our team will be in touch, and we'd love to, have a dialogue with you and see how we can collaborate. Perfect. The link will be there for you. I'd also like to make a plug for questions. We've seen a few questions come in already, along with the pre-submitted ones. So if you have questions that you'd like our teams to discuss today, do put it in the chat or the Q&A, and we will get to it before we close out. Now, let's head into the second part of our agenda. We are roughly half of the way through. So we spoke a little bit about what's happening right now, how big the market is, where is it going, what's really driving it. Let's take a look at how AI is changing this, and the way you gave us an interesting segue into this. But before we do that, let's do a poll again. You'll again see this poll pop up. And we'd like to talk a little bit about where do you think AI specifically will create an impact in loyalty programs amongst these four options? And I know it'll be across, but what do you think is the biggest area of impact or value or ROI with AI? Is it hyper personalization and the next best offer recommendation sort of engine? Is it predictive churn and retention modeling? How do you make sure you don't lose your best customers, as we said? Is it real time personalized customer engagement? Or is it truly autonomous campaign orchestration, as agentic in marketing really comes to bear? And I'm curious to see what our audience thinks. So Divya, as people vote and I see responses coming in thick and fast, what do you think, the mood music is in terms of clients? Where are they really investing with AI in these days on loyalty?
Sure, Nitish. And as you mentioned, right, we are seeing investments across. But if I have to take the bets and see where are we seeing the most traction coming in and which are the easier ROI cases that we are seeing coming within the market is, I'll place my bets on hyper-personalization and next best offer recommendation, as well as predictive churn and retention modeling. These are the places where it has been easier to implement AI and get some traction. However, going ahead, when I look at within the next 2 years, and we see more and more implementations of agentic AI coming in, real-time customer engagement in the moment nudges and autonomous campus orchestration is not very far looking forward.
Yeah, I think you've summarized our audience's mood quite well. Nearly half of them have voted for hyper-personalization and next best offer. That's definitely a big area of focus and, an area where AI is accelerating it, followed by predictive churn and retention modeling, because again, those are things which are not just far out in the future, but clients can start to see an impact today, here and now. And as you said, whether it's real-time customer engagement or truly real-time and in the moment nudges along with agentic marketing, that's further down the pike. We're seeing early interest there, but I think it'll be great to see how that evolves. Perfect. So this was a really, really interesting view around what the audience thinks. So let's start to talk about where do we go, from what we call predictive to agentic. And I know agentic is the latest buzz in the town. I'm sure it'll be autonomous in a few years, if not AGI. But what has really changed and where is it starting to create a real impact, as you said, as we dissect the impact of agentic?
Sure, Nitish. So, as we look at loyalty right now and how it's evolving, one of the clearest patterns that we are seeing is there's a movement from descriptive to predictive and now towards agentic AI. So, what you will see on the left side of the slide is descriptive era, or what we call the past state of loyalty. This is the one where you had static dashboards, performance scorecards, monthly summaries. What these systems used to tell us is what happened, but they didn't influence what will happen next. Loyalty execution was there, but very slow, batch driven, and largely very human operated. If you look at the middle of the slide, right, that's where we have the prescriptive era, or where I will see most of the enterprises still are currently. What we are seeing here is AI and analytics are helping you forecast outcomes, whether it's churn prediction, next best offer model, or lookalike segmentation. This is one of those eras where we have made a significant step forward, but fundamentally, there's a lot of reliance on humans, on marketers, to interpret these insights and actually act upon them. So the action part is still very much human dependent. Where we see the next wave coming and where do we see the future? That's what we call the next chapter of loyalty or the agentic loyalty. What we expect here is AI systems won't just forecast outcomes for you, they will actually act on them. For instance, they can sense customer behavior in real time, decide the most appropriate action, and execute autonomously. And autonomous orchestration remaining the key here. For instance, think about real time adjustments. Contextual nudges precisely when a customer is hesitating or has certain doubts when it comes to making a certain sale. This is where there's a bigger shift when it comes from dashboards to dynamic reasoning and actual orchestration. And this is where we place the and we see that this future is not very much far behind. Probably 18 months or 24 months down the line, this is where we see the chapter of loyalty becoming and most organizations moving towards. What we'll do further is, in order to add some color to it, we'll see across what use cases and something that we actually tallied across pool is what are use cases that are getting a lot of traction and where AI is making easy investments, as well as what are the next set of use cases that we'll see invested probably 12 or 18 months down the line, and which are the net new use cases being created within the market. So if you move to the next slide, what you will see here is the use cases where AI has significantly made impact. And these are multiple use cases: churn prediction, next best action recommendation, reward optimization. Here, what we are seeing is enterprise traction is very heavy and backing it by some industry examples. Walmart. What it does is it uses machine learning to predict churn and deploy very targeted high lift retention offers. All of us, while using Amazon, have seen continuous recommendation based on actions and benefits and completely based on our real time consumption patterns. Across Sephora, what we have seen is they use AI powered CDPs to segment customers across multiple parameters, whether it's value, frequency of engagement, and actually deploying offers based on that. American Express. significant traction when it comes to fraud detection. It uses anomaly detection to identify what are the frauds when it comes to loyalty transactions and actually red flag for them. However, what these enterprises show is AI is not moving just from simply predicting customer behavior to actually shaping it. Across these examples, what we are seeing is real-time custom continuous optimization of loyalty experience being happening and actually being put in examples and back through a lot of enterprise examples that we see here. So if we move next, what we will see is, if we can move to the next slide, what we will see is how this evolution is moving from predictive and AI driven to agentic AI ecosystems, where there's a whole new category of loyalty use cases coming in. At the top, what you will see is the rise of generative content for loyalty campaigns. AI is able to auto generate tier specific emails, messages, app notification, and create variations and localization to segments. What it does for customers is reduce the production cycle significantly from weeks to minutes. Another interesting area that we see picking up is loyalty nudges, which are powered by agentic and predictive models. They deliver micro rewards, reminders, contextual prompts that helps customers to continuously engage, earn, or redeem. Across the customer lifecycle, the nudges are being delivered to ensure that there is an engagement across each space. There's an increasing role of what we are seeing agentic loyalty advisors, or what we can call as digital concierge services. Conversational AI agents help you navigate tiers, discover redemption opportunities, understand benefits. They help you look at your entire journey and act as assistants across those spaces. Few other areas that we see interest are AI driven gamification, where your learning challenges are very much related to individuals' motivation pattern rather than looking at it from a segment based perspective. And finally, as we are seeing a lot of interest when it comes to correlation loyalty being picking up, tokenized loyalty ecosystems is where we are seeing organized being able to share data across partners without the need of sensitive data sharing. And these are certain of the new use cases picking up and where we see traction expecting within the next 12 to 18 months. But what's interesting here is platforms have already started responding to this shift. For instance, some of the examples that we have here are Antavo's Timmy AI, Salesforce Einstein GPT, and IRA's Promotions Copilot. All of these are very early but meaningful steps that we are seeing towards autonomous loyalty orchestration and what we believe to be the future of loyalty going forward. And while we have talked about the use cases for AI, agentic AI that we are seeing, going ahead, what we wanted to look at it is look at it through the lens of industry. What are different verticals doing within their loyalty ecosystems and how they are using AI and agentic AI for them? So for that, I'll pass it over to Akash.
Sure. Thank you, Divya. What I'll do is I spend some time how does adoption of AI looks across different industries. One of the most important of things we have observed here is that AI adoption across industries isn't uniform. It varies significantly by industry, and that variation tells us about a lot where the biggest opportunities and challenges lie ahead. Let's start with the first one that we have banking and financial services. This is one of the highest adoption industries for AI in loyalty. Banks, as we see, they have incredibly rich transactional data and they face strong competitive pressure to retain customers. What we are seeing is they are leaning heavily into predictive models for churn detection and fraud and layering in generative AI to craft those personalized financial advice and communications. What's really interesting to see is that we are beginning to see agentic AI emerge here, systems that proactively trigger retention across risk before even it becomes visible to human. It's a very sophisticated landscape that we can see happening in the next few years. Moving to retail and CPG, the adoption story is equally strong, but driven by different dynamics. Retail has fast cycles, emotional decision making, and enormous transaction volumes. AI is helping retailers to personalize rewards at an SKU level, adjust promotions dynamically, and trigger those real time incentives based on micro behaviors of customers. Generative AI plays a big role too, creating product stories, creative variations, and campaign content at a scale that was simply not feasible before. It's one of the sectors where AI delivers immediate economic upside as we see. Moving on to travel hospitality, loyalty has always been strategic, and AI is now supercharging that. Airlines is one segment that we see has been a pioneer when it comes to adoption of loyalty programs. In fact, there's a trend that Divya covered in the previous slide that we call coalition loyalty programs, and that airline industry is the first one to pioneer that. We are seeing that predictive models personalize itineraries, recommend optimal redemptions, and anticipate member preferences. Generative AI enhances the experience layer from trip suggestions to contextual messaging, while agentic AI is starting to orchestrate interactions across the entire journey, before, during, or even after the trip. If we shift to telecom, adoption is slightly lower but still meaningful. Telecom companies rely heavily on predictive AI for churn detection and service risk, and agentic AI is emerging in use cases such as next best plans or service token adjustments. The main challenge in this industry is system fragmentation. The data exists, the signal exists, but orchestration across channels is still catching up. Finally, the last industry of this slide, as we see, media entertainment, a very different flavor of AI adoption. Here, loyalty engine isn't transactions, it's purely content. Platforms use predictive models to recommend the next piece of content and generative AI to create summaries, prompts, and personalized viewing journeys. Emotional loyalty is extremely strong in this sector, and AI helps platform understand sentiment and tailors those experiences for each customers accordingly. Moving on to the second slide that we have for industries, I'll start with electronics and high tech. Here, generative and agentic AI are beginning to support self-serve experiences, automatically generating documentation, onboarding flows, or contextual product instructions. High-tech customers, as we see, are often digital savvy, so AI becomes a way to deliver smarter, more autonomous support while reducing the burden on human teams. Moving ahead to energy utilities, it sits a little lower on the adoption curve, but they are beginning to use predictive and conversational AI in really meaningful ways. Predictive analytics helps recommend energy saving plans, identify unusual consumption patterns, and trigger those alerts. Healthcare and life sciences adoption is cautious but growing. Here, predictive and conversational AI supports use cases like medication reminders, adherence journeys, and preventive care nudges. The loyalty lens looks a bit different. It's not about repeat purchase, but rather sustained engagement and trust. Manufacturing AI adoption within loyalty is still quite nascent. Most use cases, as we see currently, focus on predictive analytics, forecasting seasonal cycles, optimizing wholesale pricing, supporting B2B partner engagement. The consumer facing side of this industry is limited, but the B2B loyalty opportunity is real and growing. And finally, professional services. AI adoption in this industry is emerging primarily through predictive models that help enterprises understand client churn risk, engagement sentiment, or cross-sell opportunities. What we're seeing across the industries is that while industries mature at different speed, the trajectory is consistent. Industries are moving from predictive to generative to agentic AI. While they move at different speeds, the direction is the same: more personalization, more autonomy, and more intelligence. With that, Nitish, I think we are ripe for the third poll question that we have for today for the audience.
Absolutely. And we spoke about, forecast where they think this will happen. Let's also talk about challenges because, we all know there are challenges in running these programs at scale. And no more so than, running AI in such a customer-facing program. So if you think about your own organization, the biggest barrier to scaling AI and loyalty, what are those? We have five options for you. So is it the lack of maybe full access or limited access to unified high fidelity first party data? We know that there's the cookies and everything around it. Is it legacy tech and fragmented siloed systems? Is it more around privacy and consent? Is it the lack of a clear ROI, not necessarily AI? And then is it inconsistent customer identity management, right? So you don't know who the right customers are and you have different systems that potentially don't talk to each other. So as you think about this, I'm curious to see, what people respond with. And, my bet is, we will see a lot of focus on what we call siloed systems and technologies. But Akash, what's your bet in terms of, and what are you seeing as you think about these options?
Nitish, as I see the five options, I would say data quality and availability is one of the biggest barriers that we see. Many enterprises today also don't have that unified high quality first party data. IDs are fragmented, profiles are inconsistent, and touch points don't talk to each other. AI can't compensate for that foundation, but it can definitely amplify that. Secondly, I would say legacy tech stack and fragmented loyalty systems, uh, especially programs that were built on older rule-based engines that were not designed for real-time decisioning or AI orchestration. These are the biggest two barriers I see.
Yeah, and I think the audience is kind of split, right? I think it's a very interesting result because, nearly more than two-fifths or 43, 44% are talking about legacy tech and fragmented loyalty systems, which you all agree. But everybody split on the other four, right? We got an equal response to quality of data, regulatory or privacy concerns, ROI or lack of, and customer identity, which just tells you that there are multiple challenges. But often, it starts with legacy tech. Now, with that, let's talk very, very quickly around how do you maximize investments from this. We often say this at Everest Group to our clients. It's not about AI, it's really about the ROI because of it. So, how do you do that? How do you do it at scale is an important task. So, let's talk about the AI implementation strategy and roadmap for enterprises. I don't think this is a rocket science, but if you think about whether it's assessment and benchmarking, implementation and integration to monitoring and enhancements. But Akash, in our experience, without going through all of this, what are the top three things you would recommend that clients do as they think about maximizing or unlocking more value because of AI?
Yeah, I think Nitish, I would say enterprises firstly need to establish clear, measurable AI objectives, what they're trying to achieve that are directly tied to customer experience, retention, and loyalty goals. Secondly, they must evaluate their current capabilities, the current data infrastructure, integration readiness, identity resolution, internal skills, process maturity that they have. And finally, aligning on the right tech stack. It's about technology selection. How do you improve the quality of first party data you have? And secondly, how does the entire tech stack and data come into together? How do you have those real time decisioning engines, ability to digest the first party data, processing it, and activating it across your loyalty programs? My quick take on this one, Nitish.
Yeah, I think that's a great starter kit, right? In terms of thinking about what to do. So that's a great segue into what we think the outlook for the next year is going to be. And we will tackle it with Divya and Akash in two ways. One, we will talk a little bit about our predictions for the future, right? Predictions are generally fraught with danger, more so in the age of AI. But Divya, you're going to do the tough job of predicting what are the top two things we think we'll see next year. And then, Akash, you're going to talk about how, whether you're a buyer or a provider, how do you anticipate that? And what's a framework in terms of actionable things that you can do? So, Divya, over to you.
Sure. Thanks, Nitish. And as you mentioned, right, how quickly the technology's landscape is changing with AI, agentic AI, making predictions has been a tough job. But if I have to take a pass at it, the two things that I completely stand by will be what we'll see in the future is loyalty will significantly surpass acquisition as the primary growth lever. And I'll tell you how I back it up. We are seeing it increasingly becoming in budget patterns. There's a significant rise when it comes to customer acquisition cost. And many CMOs are recognizing that retention is both more predictable as well as more profitable. And how they're trying to solve for this is through loyalty focused strategy and not just top of funnel expansion. Additionally, what we are seeing is this trend is going to go beyond the traditional verticals that we are focused when it comes to loyalty in. So loyalty across verticals is what we'll see is will be treated as a fundamental expectation and not just being restricted to certain specific industries that we have seen. Another key lever that I stand by will be loyalty will become more and more emotionally driven. Yeah, as we mentioned right in the start, loyalty a couple of years back was very different. It was more around discount based incentives. But today, the younger demographics that we are catering to are more and more about how a brand makes them feel, the kind of trust they hold with the brand, the consistency of its personalization, and the meaning that they could actually figure out from its engagement. So, this emotional re anchoring will be critical for young customers who prioritize brands and they will actually value frictionless engagement more and more above towards us. So, as we head towards 2026, what we'll believe is loyalty will be a more human, more experimental, and more actually driven to brand's identity. And what we'll do right now is we made these predictions, but I'll quickly pass it over to Akash, who will actually mean that what these predictions and put them what how these predictions shape into the strategy for the future. So over to you,
Sure.
Akash.
Sure. Thank you, Divya. With that, we come to the final slide that we have. That's the point framework. As we look ahead to 2026, one of the questions that we hear most often from enterprises is, what does the future ready loyalty model actually look like? And equally from platform providers as well, what capabilities do we need to enable that model? To answer that, at Everest Group, we have developed the point framework, a strategic blueprint that outlines the five pillars of loyalty success, bringing together both sides of ecosystem, what enterprises must do differently and how platform providers need to evolve to support them. The first pillar that we say program alignment for enterprises, meaning that how do you ensure your loyalty KPIs are tightly connected to core marketing and CX metrics and not isolated. On the provider side, it translates into offering configurable modules for points, tiers, referrals, and critically, robust KPI benchmarking tools and templates that help enterprise achieve their loyalty goals. The second pillar that we have is omnichannel consistency, and one of the biggest pain points we see in large enterprises. Customers expect loyalty to follow them across the app, web, in-store, and other channels that they have with the brand. Enterprise action here is to build those unified identity, synchronized tier statuses, and consistent engagement triggers. For the tech providers, this means delivering those real-time APIs, event-driven integrations, and software development kits that make omnichannel orchestration seamless. The third pillar that we have is incentive flexibility. Enterprises need to design those reward portfolios that reflect different customer personas, frequent buyers, advocates, new joiners, because a one size that fits all loyalty program no longer works. Platform providers on the other side need to support this with rule-based configurations across monetary, experiential, and non-monetary rewards. The fourth pillar that we have is non-transactional value. This reflects one of the biggest shifts that we are seeing in loyalty today. Enterprises need to reward loyalty beyond just behavioral spend, reviews, community activity, content engagement, advocacy. These behavior build emotional loyalty, one of the key themes that we just saw on the previous slide, and not just transaction loyalty. Platform providers need to play a critical role here by offering those native modules for missions, challenges, user-generated content tracking, referral programs, and so on. The final pillar, and I would say one of the most important pillars in the era of AI, that is trust by design. Enterprises need to treat trust as a loyalty currency. Customers need clarity around what data is collected, how it's used, and what value they receive in return. AI personalization only works when trust is intact. For platform providers, this means embedding consent management. It's a trend that we're seeing a lot of CDPs and loyalty platform providers embedding in their platform offering. Tokenized identifiers, compliance capabilities like GDPR, CCPA audit logs that directly feed into the architecture. Trust cannot be bolted on, it must be engineered into the platform. Loyalty that is built on data without trust is just surveillance. Loyalty that builds transparency creates advocacy.
Perfect. No, I think, Kash, that's a great summary. And whether you're a buyer or a provider, it offers you an actionable blueprint in terms of what you can start doing to differentiate and grow distinctively. Now, with this, we'd like to thank everybody who joined us today. A very participative audience as I see Q&A coming in. So we'll try and focus on this. For anybody who's not used Zoom before or the Q&A function, you can continue to submit some of your questions for us, and you also have our contact details for any follow-ups. I'd be remiss if I don't make a plug for a lot of our ongoing coverage around these topics. And we can see it on our blogs, on our website, but also there's a bunch of research that this team and more have put out over the last year or so around this topic. So with that, let's take some questions. So the way I'm gonna put you on the spot for the first one, and I know you're not, we haven't shared this with you, so I apologize. But this comes from a really interesting, a transformation lead at a very large, a top five telco, which is really around how can AI be used for customer loyalty at a large program level. And I think this is a common thing we see with clients, which is, hey, I just don't want to do a pilot or something in the basement. I really want to do it in production, move AI from being a toy to being a true tool. So where do you think AI can be used, and how can it be used rather, to drive loyalty in really large programs?
Sure, Nitish. And actually, I would like to answer this question in two parts, right? Where do the quick gains lie, and where does the future moment lie, and how do you differentiate yourself? So, certain quick gains that I see when it comes to a telco large company is predicting churn and behavior shifts, helping understand which are the customers who are not engaging. Additionally, actually personalizing the rewards that you do and not just looking at it from a segment level, but to a very hyper personalized level. Few other things that I see happening is within loyalty, how you actually do the right upsell and cross sell for these customers. Telco offers help you build the right bundling. Also, look at what are the kind of coalition loyalty programs that you can set up for them. So, these are very quick wins that a large telco company can look forward towards. But as you look forward, right, where does the future lie? And as we mentioned, right, within our presentation, the future is towards agentic. So the more and more what we will see is actually how you build that agentic AI orchestration to build in that entire reward economics, making sure that your campaign to entire reward loop cycle is continuously getting optimized and getting anchored through AI agents. That's where we see the future of agentic AI happening within the loyalty space.
Perfect. No, I think that's a great point, and I think the thing I'm also taking away is, how do you build that momentum, not just do one big thing, but get those quick wins to bring in momentum around AI and its impact before you truly scale, because it's not going to be a silver bullet right from the get-go. So I think that's a great sort of crawl, walk, run approach. Akash, let me bring you in for our next question, which is more from a growth audience standpoint. The audience members asked that, we talk about how providers should change in this new era of customer experience, uh, but also what is the opinion on how customer behavior changes and their in terms of what they're expecting with this new AI setup. So as you put all of this together, if you're a provider in this landscape today, Akash, trying to address how your enterprise customers end customer is changing and their expectations, what can you do to distinguish yourself in the loyalty landscape? And you've published research around assessing different loyalty providers and platform as well as services. So what are they doing to show up differently in this landscape?
Sure, Nitish. What I'll do is I'll cover from both lens how customer expectations are changing and what tech and service providers need to do to capture that shift. When we look at this new era of customer experience through the lens of tech and service providers, the most important shift that we see is customers are no longer formed by your category. They are formed by the best AI experiences that they have encountered elsewhere. This translates into several behavioral shifts that we are seeing. Firstly, customers expect proactive service and not reactive support. AI is definitely conditioning them to believe that their needs should be anticipated and not just resolved. What we are seeing is tech providers embedding those agentic AI, next best offers. How do you know your customers really well? Consent management. These next gen AI capabilities are being natively built into their platforms. Secondly, customers expect hyper-personalization at scale, not just segmentation, but real-time relevance that is based on identity, context, and intent. Providers, what we are seeing is they are answering through better data infrastructure, identity resolution, native CDP integration. That's a trend we are seeing across. A lot of tech providers are having those native CDP integrations in their platform and AI-driven decisioning. Thirdly, we are seeing these expectations for consistency have skyrocketed. Customers expect every touch point, whether it is marketing, service, commerce, loyalty, to feel them connected. And that requires tech providers to enable that omnichannel orchestration and API first architectures and not just siloed systems. Last point I would say is customers expect a human feel even when AI is in the background. This is subtle but important. They don't reject automation, they reject cold automation. Providers that help enterprise design those AI systems that preserve empathy, transparency, and trust are going to lead. Ultimately, as I see the code, this requires providers to evolve from delivering just services and platforms to delivering those intelligent, adaptive customer ecosystems.
Perfect. No, I think that's a great summary in terms of how they can show up differently and also help engage clients on the journey, right? Because in some of these cases, the clients don't know what they don't know. So how do you help shape that discussion becomes important as a partner, as a provider. So with this, I think, I don't think we have time for more questions. I know there were a few questions that we couldn't get to today. So what we will do is, along with, some of the people who wanted to have a discussion with our teams, we will try and do this. Perhaps we have time for one more. I think this has just come in. And I think this is maybe in terms of what are the three key factors to drive loyalty in B2B enterprises, specifically in professional services? I think that's a great point. And the way you mentioned around B2B loyalty becoming a critical thing. So let me volunteer an answer to this, but Divya, feel free to add. I don't know if there are three specific things, but I think one of the things that's happening is this one is I think there's a B2C knock-on effect, right? So when you see B2C, whether it's in commerce or in loyalty, your experiences as a consumer are influencing what you want in the B2B setting. So this is what we used to call the Sunday night, Monday morning effect, right? So imagine Sunday night, you're engaging in best B2C brands, whether it's Netflix, whether it's Spotify, and then Monday you're staring at a blue screen of death at the office computer. So how do you make sure that your enterprise experience reflects your consumer experience is a big factor. So some of the inspiration on what to do in B2B comes from how you experience this from a consumer standpoint. So better intelligence, real-time customer support, more DIY kind of videos and other things, and some of the non-emotional transactional value that Akash you spoke about. But Divya, is there anything else that we are seeing in professional services, specifically in terms of driving loyalty in B2B?
I think B2B is one of those areas where actually being transparent becomes very important. So if you look at the kind of transactions that happen over B2C and B2B, there's a very high token transactions. So actually the level of transparency and ease of effort that you can bring within the B2B, that's what remains the key driver for B2B loyalty across spaces and including professional services.
Yep, absolutely. I think that's a great point. You're not going to be doing as many transactions, but they will be higher value. So how do you account for that and plan for it, which makes the intervention really count because you won't get multiple chances to do it, and also creating a community. Perfect. I think with this, that's all the time we have today. As I said, the questions we weren't able to respond to both pre-submitted and live, we will come back to you on. And then for people who've signed up to talk to our teams, somebody in the team will be in touch to schedule time either before or after the holidays. But on behalf of Divya, Akash, and the rest of the Everest Group team here, thank you for your time today. We appreciate the dialogue. There is a wealth of resources, as I said, on our blog, on our portal around our, how we cover this landscape. So we'd love to see you around and continue the conversation offline. Thank you so much for your time today, and happy holidays when you get there.
Thank you. Thanks everyone for your time.
Thank you, everyone. Bye.